Over the next few weeks, I want to put together a series of videos, something that I would have appreciated when I first started trading years and years ago. Somewhere where I could have logged into something like YouTube or wherever you're viewing this video and seen a playlist of information I want to see, whether it's support and resistance, moving averages, or whatever. And from someone who trades. A lot of times out there, we have those $97 ebooks written by the ex-hedge fund manager that wants to release all these deep dirt secrets he knows about the markets. Yeah, they're just marketers. That's all those people are. So, and there's some really good videos out there, and there's a lot of good information out there. You just have to find it from people who trade and people who understand the markets and people who, deal with traders on a daily basis. So these videos are going to cover things that I would have loved to have seen. And this video here is going to start with one of my favorite topics, is Fibonacci. I'm not going to go get into the whole history of Fibonacci, and you don't need to know that for it to work. Now, one of the major, bashes against Fibonacci is people will say, well, you can draw lines anywhere on a chart and price will probably hit one of them. And that's correct. It would happen. But just because price hits a certain area, it does not mean that we're going to even consider looking at a trade or even looking for a trade. So there's certain things that I like to look for. I'm going to try to cover this over at next series of videos. Definitely can't cover it in this short one. But let's just get started with some basics. It doesn't matter what currency pair this is. This is going to be a Forex pair. And we can see that the market's starting to move up. Couple different options. You're going to have to decide, whether you're going to be long or short. And a lot of times what you want to do is you want to trade in the direction of the higher time frame. Now, you can definitely use Fibonacci if you're buying in down here, for example, finding out where you're going to run into some potential resistance up in this area. I'm not going to cover that. That's pretty advanced stuff. I'm just going to stick with the basics, and however you decide you're finding trends, we can actually just go with a normal price pattern. We got low, lower high, higher low, higher high. Okay, when you start getting that kind of price action, what does that mean? It means you're in an uptrend, right? The prices are going up. So we want to get involved in this trend. For whatever reason, we've decided that we want to be long this market. So the first thing we want to do is we want to draw Fibonacci retracements. You can see on my chart at 38.2, 50, 61.8, and 78.6. Some people will say, well, 50 is not a Fibonacci number. Correct, it's not a Fibonacci number. But it doesn't matter. I'm not a purist. A lot of people look at 50%. I'm sure you've heard one of the old refrains, buy or sell, 50% pullbacks. It's a strategy, I guess. Of course, I'd want to use different filters. But so what we're looking for is we want to see a few things line up here. So we just drew one Fibonacci, and what I like about this is this platform here, Thinkorswim. Price has gone through this 38.2. I can actually just get rid of it from the chart. Now we don't have it. Now it's losing some clutter here. So now what we want to do is there another level that we can draw from? So we'll go from this high down to this low here. We see this red candle here. Let's draw up. And as we're pulling in this area, what do we see lining up? It's a 78.6 level, I believe that was. Don't know. It went too fast here. Let me just grab this again. There we go. Yep, 78.6 level right there. So now we've got a combination of a 50% and we've got a 78.6. So now we're getting into some, the nitty gritty. Now we can start thinking, okay, maybe we're going to look for a trade in this area. Now we already see where price bounced. So let's just clear this mess up. And I just got rid of the whole drawing there. I haven't, as you can tell, I'm doing this on the fly, okay? So this is not all pre-planned stuff. I was going to leave these other levels in because we might get a confluence of levels, but we're just going to make things a little bit easier. All right, so now we've got these two levels here. So what else do we have? Well, we got another tool here. It's called Fibonacci Extensions. This is actually a 3-point tool. And what I want to show you is just the numbers that I use on this. You got the 100, 161.8. I actually have the 1.272 on as well, but for some reason it's not on this particular one. What I'm going to do here is I'm going to draw from this swing high, this low, up to here. Now we see what's coming in here is the 161.8 right down here. Now this 100% is a very important number. I'm not going to cover in this video, but I'm gonna make a video about that later. So now we see we have three confluences here. Let's grab another one. This swing, this swing, this swing. We have nothing on this one here. A lot of times people will put in the 61.8. Let's just take a look and see if the 61.8 is here. Let's unhide it. And you see 61.8 lines up with that area as well. Is it all a coincidence? Well, it's up to you whether you want to, buy into the coincidence or not. The fact is a lot of people look at these levels. Now we've got a confluence here. Let's say we just wanted to use one Fibonacci, and perhaps we want to use some just pure price. Well, let's take a look what we have here. So we know that we have a confluence here, but let's say we just drew that one up from here to here. We have the 50, right? Look at this, what we have here. We have a rally up, some sideways action, then price rallies up again. So if you were just to do this, oops, you can see that price is trading back in this area. So we also have price structure confluence. Let's take this off now. Do you want to duplicate? That's for sure. Do you want to do that? Let's get rid of that. And then we'll get rid of that. So now we know that there was an area here to trade. I'm not going to get into triggers right here because there's different ways that you can decide on how you're going to exit trades, or get into trades. So there's different things that you can do for triggers. For targets. Swing low, swing high, swing low, project to the 100% level. 100% is pretty important, right? The 100% is just basically A to B, C to D swings. And people use that for price targets. People also use a 27.2 level as well. Okay? Let's just take another way to look at that. We can actually draw this retracement here. Price comes up. You see that 1.272, 1.618, 2.618. And these will give you different levels that you could get out of your trade at. You could scale out portion here, and you can see what happens at 272 level, 1.272. I learned a long time ago that if price breaks the 78.6 level, you can almost be guaranteed it's going to hit the 272 level. Okay, 161.8 from another level, and you see what happens here. Price rallies off, and we get price bombing up into this area here. A little bit of a stagnant price action here for a couple of days, and then rockets right through it. Okay, I know I'm going pretty fast here. So if I will be covering this stuff over time, I'm just trying to get some concepts here. So we saw in action, we saw the confluence. Let's bring up another chart. This is the Euro Yen, one of my favorite pairs. Whoops. So let's just zero in on our recent price here. Let's make this a little bit smaller for you. There we go. Okay. Now we do see this rally up here. Let's just pick this one here. Okay. First thing we want to do is we want to go to the high. We could draw from here, but price already down here, right? We don't know that when this is happening, obviously. If we were to draw from here to here, you can see where price comes down to 61.8 and it bounces off. Is there confluence there? I don't know. Well, I would not draw this one if we're in this area right here, simply because price is pretty much at the 100 level. I draw from here to here. Let's see where price is. Let's just clear out some of the mess here. Remember, we're looking for confluence, okay? And we could draw from here to here. And look what's happening. We got the 50% level right on top of the 61.8 right here. Let's get rid of this level here. So now we've got a couple of levels overlapping, both of these, here and here. You could draw from here as well. And does it suit you? There's a 38.2 level here. We could leave it in, but since we know right now that price, it does come in this level anyways, and this level, you don't just trade at these levels, okay? So let's just leave, we can leave this out because we know where the 38.2 level comes in, okay? We also know that it makes this level stronger right here, okay? So what else do we have? What else do we draw to see we have a confluence? We got two retracement confluences. What else do we have? Well, we actually have price structure confluence. We have an area where price came down to and rocketed off there. So we kind of have three things in common here, but we want to find just through Fibonacci work. So let's see what else we could do. Now you notice on this pattern here, the way this retraced is actually quite these are very, very nice kind of trades to take here. You get the perfect, if you're into Elliott wave, get the wave down, A, B, C, and once you get the C wave starting to break into the A wave, you're in the middle of a correction. Is something that the overlap is a lot of what people look for in Elliott wave. And obviously to confirm it, you want to break above this, which it eventually does. But what does price do? It actually goes up. Okay. So this is actually a nice little pattern here. So what we can do here is, remember I said before, if price goes by the 786 level, it goes up to the 1.272 level. And I got that actually from a trader, last name Braun, and rest in peace. He was an amazing educator, and unfortunately he passed away. And the trading world has lost a, from what I could tell, a very giving and knowledgeable man. So we have the straw retracement level from here to here. See price rally up to 30. It's backwards, right? 38.2 level. So obviously it doesn't mean much. But look what happens here. Price breaks through the 786 level, smacks dead on to the 1.272 level, 127.2 level. See that? So now you see what I'm talking about. Confluence. We have this zone here. Okay? So that's what I want to cover in this video. I just want to cover the confluences. And, you know, a lot of people will say, well, I don't trade Fibonacci for whatever reason. You go to a lot of forums, people bash it. People that are bashing it are the ones that the next week are trying something different anyhow. So I just want you to get the concepts behind you so you understood a few things. So here are the numbers that I use. 38.2, 50, 61.8, 78.6, 127.2, 161.8. Okay, and I also, let's just change over to the Fibonacci extensions. The 100, 161.8. Occasionally I'll have a 61.8 level in, but a lot of times that gets blown out. So you understand so far where we're going, right? We're talking about confluence and where all things come into play. Now, I'll be honest with you, it is a little bit subjective in drawing where you're going to draw from. All right, it is subjective. The way I look at it is, I look for moves like this. This swing high to swing low is a pretty big move, right? It stands out. This move stands out. This one from this swing to this doesn't. This stands out. These are what I would draw from. So it is subjective. You will find ways to zero in on the proper places, the meaningful places, and you just want to see that there's been some price movement to draw from. All right, places that stand out. That's what we want to look for. When I first learned Fibonacci, the person I learned it from, even these momentum candles are great places. And this video is dragging on. I don't want to drag it on, but let's just draw from this one. Well, unfortunately, this kind of makes the move up, but you know, we come right down to the 50 level. Just doing one more. Like I said, this stuff's not planned, okay? So it's in the moment. I'm just trying to look over here. Do we have a level over here? No level I'm going to be drawing from further over here is going to make much of a difference, because the 38.2 is probably going to be down this level here. If I didn't know what already happened, of course I would draw them, but for this instance I don't really have to. Draw from here to here to here. The 100% level comes in the same area, so we're getting some confluence built up, right? That's from here to here. And let's draw from here, this low, whoops, this low, up here. Now obviously price has come down, but it gives you another level that we could have looked at as well. But like I said, we're looking for areas that have a confluence. Okay, if there's no confluence, we don't even look at a trade. So if, let's say, you drew a whole bunch of lines and nothing came in this area right here, well, there'd be no plan on taking a trade there. And next couple of videos, I'm going to cover what do you do when you get down there. You know, how do we know we're going to take a trade at that level? Okay, this is just a setup. When you draw their Fibonacci levels, this is just the setup of kind of alert you that, you know what, prices coming into an area that we will consider taking a trade. Consider. A few other things have to come into play. So I hope you found this video useful, and we'll see you soon.